Let us look at some of the structures used by treasury departments of Islamic banks in Malaysia. Malaysia has a very active Islamic interbank money market, IIMM. The excess liquidity of one Islamic bank can be placed with another Islamic bank on Sharia-compliant basis. The period of liquidity placement can be from overnight to 12 months. Let us discuss some of the important instruments which are being managed for liquidity management. The excess liquidity of one Islamic bank can be placed with another Islamic bank on the basis of mudarabah. As you are aware, mudarabah is on the basis of profit sharing. The profit sharing ratio is negotiable among both parties. The rate of return is based on the rate of gross profit earned at the end of investment period. One important point to note here is that at the beginning, the Islamic bank which is placing its liquidity will not know what return it will receive. It will only know at the end when the actual profit gets generated. Let us now discuss how the structure of wadiyah is used to manage liquidity. The excess liquidity of one Islamic bank can be placed with another Islamic bank on the basis of wadiyah. In this instrument, the Islamic bank which accepts the funds is viewed as the custodian for the funds, and there is no obligation on the part of the custodian to pay any return on the account. If there is any dividend paid by the custodian, it is perceived as hibah, gift. So, one important point here is to note that it is for the bank which is placing its excess liquidity, it can expect to receive its principal, but there is no surety to receive any return. Now let us look at how sell and buy structure works. In this instrument, an Islamic bank which wants to place its excess liquidity sells Sharia-compliant assets to another Islamic bank at an agreed price, and subsequently, the buyer, through a unilateral undertaking, promises to sell back the same assets to the selling bank at an agreed price. The Bank Negara, Malaysia, provides many financial instruments for Islamic banks to invest their excess liquidity. To name a few, they are Islamic accepted bills, Islamic private debt securities, and Sukuk Bank Negara Malaysia Ijarah.